Hello and welcome. You are with us on Bazaar Morning Call and we're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me in the studios as always is Nigel D'Souza. Today we have Mangalam joining in as well. And guys, we finally have a new man on Mint Street. That's one of the major talking points that will sort of occupy our imagination today. But otherwise, things are not looking too bad on the global front either.
Things are not looking too bad on the global front either. Some, decline from the highs on Wall Street. That's pretty much warranted. But you speak about the new man on Mint Street. Let's take a moment and salute the old man as well. Shaktikanta Das. When he came in, everyone said that, everyone questioned his effectiveness, his capabilities and all of that. 6 years. He's gone through the pandemic. We've gone through multiple specific bank-related issues, a couple of wars, an interest rate cycle and so much more. With nothing, but great. You don't only swim in troubled waters, you do extremely well out there as well. So that's telling you about, he was tested by fire time and again and came out like true gold. Not for any other reason has he been awarded, as the best central banker in the world multiple times.
Well, that's right. We thumb the table about the Indian equity markets and say that, well, India's done very, very well and we have, a better path ahead. I'll tell you what, in terms of central bankers, you hear some of those central bankers across the globe and you wonder, what they're going to do next year. A path was stated and he followed the path more often than not. So salute to Mr. Das. Thank you for the last many, many years. And now over to the next man in charge.
Absolutely. I'll remember Governor Das's smile. I'll always remember that smile and, may he continue to smile for many, many years in all kinds of, public roles that he will take on from here on. Such grit and such strong actions.
The beauty about...
but the smile, very gentle smile, but strong actions.
Incredible. What stands out in, RBI Governor Shaktikanta Das's tenure, and maybe Nigel would agree with this, Rahul Dravid as well. These are solid people. At the time things are going on, they're extremely strong, solid. Yeah. You remember them a lot more in their absence. Because, everyone will go out, hit sixes and all of that. And that's in the time when you miss someone who's just solid defense, blunting the ball. Yeah. It takes a lot of effort to make things look so effortless. So I'm waiting for, the time he writes his memoir about this period at some point in time. A lot of the RBI governors, prior governors, have written their memoirs. This will be something that I'll most definitely look forward to. The effortlessness with which he took so many efforts.
Made it look so easy when it wasn't that. We know that. By the way, there will be a press conference today at around 11:30 a.m. When Mr. Sanjay Malhotra takes over. He will be interacting with the press, so watch out for that. But we have a full market to trade and lots of other cues to go over as well. So let's kickstart things. Now, Wall Street had a bit of a tepid session. We had a mild red across the indices, about 0.5% lower. It was a tech-related sell-down that happened, and even in after hours, the futures right now are looking at a mild shade of red. And that's largely thanks to, again, some issues around tech stocks. So while we were trading, it was all about NVIDIA and whether China is starting some antitrust investigation there or not. Even the AMD stock actually went down yesterday. And in after hours, Oracle's numbers weren't that great. That stock's been trading lower, 6-7%. So therefore, continuing with some caution on Wall Street. But Asia is actually looking much, much better, starting with the Chinese market. In fact, if I look at the Hong Kong Hang Seng, let's pull up those markets on the screen if we can. Last time I checked the Hang Seng, it was rallying about 2-odd%. Yeah, that's still the case, 2%. The mainland Chinese market is also up and about. And, the Chinese market, is the Shanghai Composite, that is up about 1.7%. And why is that? Because of what happened in the last 1 hour as Hong Kong was closing out yesterday. So just to jog your memory, yesterday after the Politburo meeting, there was a formal communication. It was in Chinese and translated. It basically meant that, the country will now be pledging a more proactive fiscal policy approach and also a looser monetary policy approach. And we haven't heard that term looser monetary policy in China since 2011. So the market got really excited. And then there is another big economic meeting happening later this week, probably starts tomorrow. And that's where people are expecting more concrete, big stimulus announcements as well. So China is actually doing pretty well for itself. We've discussed the governor for a goodish bit, so I won't repeat that. But like I said, 11:30 is his first brush with the public at large and with media. So we'll watch out for the man. He is a 1990 IAS batch, 1990 batch IAS officer, has been the revenue secretary. And, what scintillating credentials from IIT Kanpur. And then he went on to, I think, study public administration at Princeton. He has been at REC as a CMD. So, absolutely glittering career. And the fact that he's closer to tech, I mean, he's an engineer by sort of education, perhaps that'll equip him really well to take on all the fintech challenges that we're in the midst of. Let's quickly move on, talk about fund flows. Yesterday, we had, foreign institutions on the buy side, but it was a smaller figure, about 700 crores. The bulls won't be complaining. Domestic institutions sold off, stock worth about 1,600 crores. Let's quickly come down to stocks. And of course, our team will tell you more about this. Tata Motors is hiking prices for some of its vehicles. Watch out for this one. Metropolis is more consolidation in the diagnostic space. They've gone ahead and picked up equity in another, healthcare provider. So look at this one. Life insurance data came out, and the picture is very simple, that private insurers have done really well, but the likes of LIC have suffered. So just for reference, HDFC Life, November premium up 13%, SBI Life, it's up 8%, ICICI, Pru has done even better. So we'll watch out for some of these insurance stocks as well. Plenty to keep us busy today, Nigel.
Well, that's right. Manglam, you want to take,
Yeah, I'll just talk about the Wall Street and how our markets are likely to be in today's trading session. You spoke about some bit of profit taking overnight that we saw, about 0.5 to 6% decline from record highs. So key indices, you have the Dow Jones, the Nasdaq and the S&P 500. What will be more interesting is how these indices pan out in today's trading session, and the Nasdaq in particular. Why? Because yesterday, Nvidia was down about 2.6%. It's been a big mover, and the reason for that is the Chinese regulator is investigating the company over possible violations of an anti-monopoly law. So whether this, trouble is something that the company strides through is something we'll be watching out for. The second thing I'll be watching out for is how Oracle performs, because post-market, Oracle was down 7% as their quarterly results missed street expectations. So those are a couple of factors we'll be keeping an eye out on. From the macro standpoint, tomorrow will be the US November CPI data, where 0.3% to or 2.7%, depending on whether you're looking at it month on month or year on year, inflation is expected. And this is the last major data point that comes in ahead of the Fed meet outcome on December 18th itself. Yesterday for our markets, while the broader markets did extremely well, the Nifty was, pretty much in line with the technical levels. The day's low on the Nifty, 24,580, absolutely in line with the 50-day moving average. The day's high at 24,705, in line with the 100-day moving average itself. But the story is actually in the broader markets. In the last 1 month itself, well, the Nifty is up 1.9%. We have the Nifty Bank up nearly 4%, mid-cap index up 5%. The small cap index is up 6%. And this is at an index level that we're talking about. Individual stocks doing a lot better. What's not doing well is FMCG. This month itself, the index is down 1.5%. GCPL did speak about subdued demand, rising input prices. So what it means is that could there be some pressure in the third quarter? Because there have been high expectations from this third quarter given festive season and the weakness that we saw in the second quarter already. They say that, good stocks either come at good news or good price. Godrej Consumer down 27% from its high, HUL down 21% from its high, Tata Consumer down 26% from its high. And these are only nifty FMCG stocks that we're talking about. Asian Paints down 30%, Britannia down 28%, Nestle down 20%. So just keep an eye out on them. Blue chips going through tough times, all of them down anywhere between 20 to 30% from their 52-week highs.
Well, that's right. It'll be interesting to see how that pans out, Manglam. And yesterday as well, we had given it as the sector of the day on the downside, right, and it played out in that manner. Well, let's take stock of what the F&O markets did yesterday. The FIs, there was some lightening of positions. There were some shorts as well that were covered by closure on 2,000 contracts. And that's what we have seen in the last few sessions. So if you look at it, in terms of the short positioning, it's come down from around 1.2 lakh contracts or thereabouts. It's come down to roughly around 35,000 contracts. So they remain net short, but a lot of that short covering bounce has already taken place. You pull up the chart, that'll tell you the picture. Moving to the option skews then, they've seen a fair bit of action on both the put as well as on the call side. And the PCR had moved to around 1.2, 1.25 odd. Now that's cooled back down. It's come back down to around 0.9. At around 1.3 odd, the sense you were getting was that the put writing was getting too easy. So now that's returning back to the median at around that 1, to 0.9. And that's because a couple of strikes were active. The 24,700 call, well, that was fairly active. 40 lakh shares getting added out there. The premium at around 100 rupees. And on the downside, you have the 24,600 put that was fairly active. The premium out there is roughly around 150 rupees, which brings us to the levels. The Nifty is now hovering around that 50 as well as the 100 DMA. Last two sessions, the Nifty has ended mildly lower in trade. Nothing really to worry. But if you're looking at a support zone, maybe, just maybe, today if we go closer around this range of the support zone, maybe we could see a bit of a bounce because that's where the first support zone comes in at. Then you're looking at the 24,000 odd mark. But this 24,450 to 24,500 becomes an important mark. Last week, we went and we tested the higher level. So that's the resistance zone that you're looking at, which incidentally comes in around the 100 DMA. The Nifty Bank as well. Well, that, the number on the downside you're looking at is around 53,000. On the upside, the resistance mark, which we took a U-turn from here for the last week itself, was around 53,900. The sector that I'm looking at is metals. Yesterday as well, intraday towards the end of trade, you had a bit of a pop-up. There are two factors playing out here. One is there is hopes that, in fact, we'll see some kind of stimulus, or China is bracing for a better 2025, which will help demand in all probability. So that's one factor. The second factor is there is this buzz that some of these steel companies, they have rallied hard. They have put their requests forth that we require some protection. Will there be something that we could hear about in the next couple of weeks? It seems the street is optimistic of hearing something. So that's why I'll keep an eye out on the metal index.
Okay, absolutely. Metals will be a place to watch given the high expectations that are riding again in terms of that Chinese stimulus.